Good morning, traders, and welcome to our live trading week ahead, coming at you live from New York City. No, actually, live from Colorado Springs. I wish I was in New York. I love New York. Best city in the world. A lot of friends there. Anyway, we are now on air with our Trading Week Ahead broadcast. Wanted to welcome all of our returning folks as well as our new faces. It's great to see a big turnout. As always, all information is for educational use only. I'm not making advice about what to buy, sell, or hold. I wish I'd spoken at the Money Show this past couple of days. They're always a great event to go to. So what's up with that wild and wacky market? The main point that I want to bring to your attention is, as I've taught you for years, we don't have a lot of big green candles accompanying the uptick and the uptrend, right? We do not see a lot of big green candles. So it's a thin uptrend. One thing to look at also is volume in the spiders. Are we seeing increasing volume with increasing price? We are not. That's a key tell that the buyers may be running out of steam, and it's a good time to sell, or take some profit off the table at every 2-day low. Anytime something gets under the previous day's low, I start scaling out on swing trades 100% of the time now. You've got a 2-day support window, and at the first sign of trouble, whether it's a gap continuation or a big gap sell-off, we're likely to do that. Now, if we do get so the point is volume is not going up. We have volume flat, except for a couple of days, but volume is lower down here than the previous volume overall. So it's a thinly supported S&P. That divergence is a key clue, kind of like being a detective, being a key clue or tell that the price is not being supported by volume, at least in the spiders. Now, if we take a look at the VIX, the VIX is way down near all-time lows, down near 12, which I have not seen a VIX this low ever. So it's definitely oversold and ready for a bounce. And again, as I've been saying, I'm still long a few $1,000s, the inverses like TVIX and SQQQ and SOXS. Do be ready for potential bounces in these because the profit potential is enormous. And so it's a smart idea to, anytime any of these guys takes out 2-day highs, I'm going to start building the trades back up because I want to be in at least 25, 30 grand in the inverses short at the first sign of a market sell-off. I'm currently only, I think, $4,000 short the market, 3 or 4,000. So hardly anything for me. That's hardly anything. Tis but a scratch. Inconceivable. The Princess Bride. Great movie. Anyway, so we've got to move up here. If you take a look at the sectors, you can see relative strength yesterday in biotechs and semis, right? Our NBI, big green day yesterday in the NBI index chart, right? That's one of the biggest days I've ever seen in the NASDAQ biotech. So that's a really big biotech liftoff day. And in fact, that's the biggest green day in 3 months. Biggest green candle. So first thing, a top-down approach to professional trading is you start off with an analysis of the S&P. What I told you is that the candles are getting thinner, so we're likely to see a pullback sooner rather than later. So it's a smart idea to number one, tighten up stops on any open long positions you're in. And number two, look for defensive hedge plays by going long in some of the inverse instruments that go up when the stock market goes down. My favorites include things like SQQQ and TVIX and SOXS. Now, if we take a look at the other sectors, semiconductors, nice steady uptrend. It's not beating the market though. If you look at banking, finance, and insurance, you can see bank stocks are still holding steady, but insurance relatively flat. And if you take a look at cross sectors, you want to look at breadth and depth, and whether you're looking at FANG or other tech momentum, whether you're looking at large cap tech stocks, you're looking at momentum or value stocks, looking at energy, home builders, healthcare, whatever sectors you're looking at, do evaluate the relative strength of the sector chart compared to the S&P chart and only play with those sectors that are beating the market. The only thing that had a bigger green candle or bigger directional strength is biotechs. And we've seen a lot of small cap biotech pop and drops lately, right? So it's been interesting to see which way things are running. Now, in terms of great charts to look at, the one I'll lead off with, which was a pick for my Swing Scans members, and I'd mentioned it last week. I gave them the specific entry trigger and a much more detailed tip, but Western Union is one of many I've been covering for a while for my Swing Scans members, and it's got a really good bounce off the 50, simple moving average, steady uptrend, what I call an acceleration ramp. Steady uptrend, hockey sticks into a sharper 45-degree angle breakout. The only challenge with this is the whole row bodies of the candles are getting smaller, so if it rolls back down here under 27.5, 27, may make sense to drop it. Oh, thanks, Bob, saying the VIX was 8.5 in early 2018. Okay. I didn't know it was that long. Why don't I use the 20-day MA? The 20 gives too many false positives. Even the 50 SMA gives a lot of false positives. So I like and also the reason is any institutional trader uses the 50, the 100, and the 200 simple moving average. So the main reason is Wall Street's top traders use the 50, the 100, and the 200. That's what the quants use. But that's good to know, Bob. So the VIX was lower. It's down at 8.5 in early 2018. That's a big drop. Anyway, NPTN. Now I've got to check that because you could absolutely be right. Let's take a look at the 2-year. You are right. Thanks. Well, this year it hasn't been under that, but you're right. I'm curious what it was back in the NASDAQ tech bubble. Look what happened though. Last time the VIX was down at 10, or like Bob said correctly. Thank you. I appreciate that. Last time the VIX was this low, what happened next? Mother of all sell-offs. When the VIX compresses, and especially if it gets shorted heavily like it's been lately from institutional folks, it may well lead to a pop to the upside. So keep it on the radar. Now, last week I'd mentioned MBT would be a good play, and so congratulations to anyone who took it. This is another acceleration ramp that spiked up to new highs. The ratio of green to red candles is healthy, and it's got lots of large green candles lately, right? Then out of the last 6 days, we've got 3 relatively large whole row body green candles. So that's a good chart up at new highs. PDD, Panduo, is one that we'd covered in the live room. I remember it spiked up this 36 to 40, right? It had a 4-point run in a single day on a gap continuation. Small gaps that continue are my favorite plays, and it had a really good play up here. Going quiet here lately. Let me ask you another quick question. Where would y'all trail a stop on this guy? I think the more experience you get, the more practice you get identifying entries and exits. And again, with the zero commission environment, there's no reason not to be doing a lot of small share testing, right? Right. My favorite #1 pick for the world right now is a TD Ameritrade because you get the Thinkorswim platform included free. And I was talking with the Ameritrade guy, one of the Ameritrade support guys yesterday, and they confirmed that you can start an account with like 50 or 100 bucks or whatever and still get the Thinkorswim platform included free with zero commissions, which is amazing, especially since they used to charge $6.95 a side, I think it was. So from $6.95 to zero. And Fidelity would be second choice. So for brokers, never use an overseas Bahamas broker. Ask any sure trader, former trader. Epic fail. Don't use an overseas broker. Use one of our American brokers. They're much better, right? And it's much smarter to trade in cash. If you don't have 25K, don't go to a Bahamas broker. Unlike what some morons are out there telling you, it's much smarter to trade small, trade often. You know, as long as you don't go above your unsettled cash, you can trade. You can beat I won't say the word beat, but if you're using a cash account versus a margin account, a lot of traders aren't aware you could trade 20 times a day in a $3,000 account as long as you don't chew through all your cash, right? So the way to learn is to trade, say, 1 or 5 or 10 shares or something really small over and over again, and it's kind of like on the broker's nickel because there's no commish, right? So, you know, 1 or 5 shares. Practice your patterns. Now is a rare window of opportunity. I don't know how long zero commissions will last, but there's no rule that says that they've got to keep zero commissions forever, right? So I would expect that commissions will creep back up Probably not in the next year, but at some point. So now is a good learning opportunity to practice your heart out, to say 1 or 5 or 10 share trades. Make sense. Anyway, where would you trail a stop on PDD? So in order, my favorite brokers are Ameritrade, Fidelity, and Interactive Brokers. Any of those 3 are good. IB doesn't give you the advanced platform, the pro platform for free commission load. So for that reason, I'm no longer recommending them as the top one for intraday trading. It would be either Fidelity or Ameritrade. And if you need charts, then go with Ameritrade because they've got the Thinkorswim platform, which is Rockstar Charts, for free. I can't believe it. It's just like, wow. How long is it going to last? It's a golden time of opportunity to be an active trader. Likely to see, the good news for all of us experienced traders is that we're likely to see a lot of new folks who are inexperienced in the markets and don't know what they're doing. So it'll be easy to, more capital inflows, more money in the markets and easier to trade. So momentum is likely to increase and volatility, and the VIX is likely to increase sometime soon. PDD 40, 42, 42 and a half, 42, 41, 42 and a half. Hey Jack, how you doing, man? And ask TradeStation desk to get on a zero commish. Okay. Yeah, and that's a good point. Unfortunately, and I confirmed, our friends up north in Canada and other countries other than the United States sadly don't get the zero commish. I don't know why, but there's some regulatory constraints. But all of us here in America, you get zero commissions, which is unbelievable. There's no catch either. You don't get bad order fills. They don't sell your order flow inappropriately. There's no big slippage. There's no problems like that at all, despite what some people who are in bed with Bahamas brokers would have you believe. The truth is, Ameritrade rocks, and so does Fidelity, and so does Interactive Brokers. Use a good American broker, right? Trade smart. 42 and a half. Yeah, 42 and a half, 42 drop dead. That'd be the worst case. But yeah, 42 and a half would make sense. Now, what if it gaps down to 42.30 come Monday morning? How do you manage that? How do you manage gaps? What I do frequently to great effect, which I found has been a trade saver for a lot of the inverses, is if something gaps down against you, I don't panic out pre-market and I don't sell it on the open, because often I usually give it 20 minutes or even up to 10 o'clock to come back to life, because oftentimes gaps down will keep going down a little bit, from 9:30 to 9:40, and then come back to life. And you go dope if you stop out at the first sign of trouble. So, the point is, if you see something that let's T triple Qs. Trying to find a gapper here for us. Often gaps up will reverse, so you don't want to buy the first sign of a breakout in a gap. And often gaps down will also fill. We've seen a lot of gap fills in our current market. So for that reason, if you're in a swing trade and something gaps against you, hold off for a little bit, 15, 20, 30 minutes, or 50 cents under the current support, whichever one hits first. You don't want to hold through it if it does a free fall, which is rare. Usually gaps down will start to grind around for a while before eventually filling the gap or going back down. So make sure to play safe with those. As we're looking for directional volatility opportunities in our markets, meaning it's likely to keep going up, things like Western Union or Rockstar charts. For small cap charts, things like NPTN, we've got a bullish cut pattern here, a nice gap continuation with good momentum. So plenty of opportunities out there to trade the markets the right way. What you want to do is make sure that you've got a plan for either attacking the market for new high breakouts, particularly in 90-day highs or even 20-day highs or 52-week highs. Anything taking out new highs on volume is great. Something that I hope can be of big service to you is the following. Do be cautious and look for signs of weakening in your current, and be very pessimistic right now about markets continuing to run without a hiccup, because they've been running so far. They're going to sell off. It's just a matter of when. And we all know that, right? You should all know that, right? The markets aren't going to sell off. I'm an expert at trading both bull and bear markets. One thing that I found is that the longer a trend continues unbroken, particularly if you look at the lackadaisical absence of enthusiastic buyers, despite everyone saying it's a rally market, what's the ratio of green to red candles during the last week? I used to be a corporate statistician for the Ford Motor Company, so I am a hardcore numbers guy. You're looking at mean reversions, design experiments, Taguchi loss function, fractional factorials. I know it all. One of the things you want to look for is technical trading clues that the buyers are running out of steam. And also on the flip side, that bulls are going to either continue up or down. We've got 3 out of 5 days were red last week. 3 out of 5. The majority, 60% of the trading days last week were red days, despite the fact that we got a gap. It was a gap doji, ended red. Bearish engulfing, ended red. Small dragonfly doji. I'm trying to remember all these patterns. Learn candles from Steve Nissen. They work. I'm profoundly grateful to Steve for teaching me how to use candles. Anyway, we got a doji there. We got a green engulfment here, so it's still a long bias market, but the bulls may be getting tired, so take profit early. 3 out of 5. Who else in the whole world is telling traders that? It's an absolutely correct technical observation. 3 out of 5 of the last trading days were red. Nobody's telling traders that, except all my competitors are going to go off and make YouTube videos and Instagram crap because they're all watching. They know who they are. I see you. Anyway, the point is 3 out of 5 days were red, and more tellingly, the whole real body heights of the candles have been really compressed the last 2 or 3 weeks. We don't have big epic, I probably overused that word epic. We don't have big, this is a healthy chart. Nice big green candles, full steam ahead, except they're getting smaller here. And the VIX still in a downtrend, so it's still taking out new lows even as of yesterday. Closed down near 12 and maybe good for further pain and suffering to the downside, but at least the slope of the line of the VIX is going flat rather than the slope, the same slope down that the S&P is sloping up. They're inversely correlated, or they tend to go inverse against each other. I'm not seeing a lot of love in gold and oil, right? Nugget's been going down, so of course, J-Dust, which I was trading this past week, is starting to get a little bounce right under the 50 SMA. But neither gold nor oil has been nearly as exciting as other instruments that we've had to work with, right? We've had much better charts elsewhere. So a gold and oil forecast is be on the lookout for longs in Nugget and other gold instruments if the market tanks, which I'm sure it's going to pull back soon, so be on the radar. Keep that on the watch list. Let's see, what else do we have here? Good charts yesterday. TDC was a gap fill, right? I called it long for my live room members. Anytime you have a gap from, say, 31 down to 22, more than a 10% gap. So a $30 stock that gaps down 3 points may be more likely to keep going down. Something that gaps down 9 points may be due for a fill, and that's we've seen a lot of gap fills lately. I remember Gildan Activewear, GIL, was a winner for us as well. Small caps may bounce. Something like this guy. I was going to trade this over 240, but I never did get over 240. I do trade small caps with extreme charts. This guy had been a $5 stock that sold down to $2. It went sideways yesterday, but it may be good for bounce. So keep that on the radar. Potential bounce in PRTY. COMM's a much better chart, buying new strength at new highs. We've had so much up and down price action. One of my traders had mentioned Square, which is a really good play. He called it here in the live room for our members back on Thursday, and it spiked up nicely. And I put the long call somewhere over 64, I remember, and it ran all the way up to 66. So even if you're late to the party on an initial open range breakout, often there's more volatility ahead if supported by increasing volume, which this instrument was. And of course, it sold down and went sideways yesterday. And so much good directional volatility in these instruments. You owe it to yourself to figure out which of these charts make sense and how to take advantage of price action moves once they do start to run. So as always, trade smart, trade often, make sure that you're playing a careful game because, like I said, the S&P is it's skating on thin ice, right? To use an analogy here from Colorado, where we've got lots of lakes and rivers and mountains and all kinds of scenery and nice, honest, hardworking people here. I like it because we got a lot of folks in the Midwest. Though being the green state it is, we've got a lot of other people as well, but hey, it's okay. It attracts a lot of people who are cannabisly inclined. Speaking of which, our cannabis stocks have been taking a dump, except Canopy Growth was pretty good yesterday, and I'm going to be covering that in a few minutes for my Swing Scans members. But of this pot stocks, they've all been beaten the heck down. We got a hammer down there, led to a bounce, but it dropped quickly. We got a bullish engulfing here yesterday, so we may get a pivot in Canopy Growth. That looks to be one of the best of the pot stocks. They've all been beaten down though, so I'm not going to be aggressively playing those long. I prefer to focus my energy on things that keep going up and have good directional breakout volatility. So anyway, I've got to run. I've got Swing Scans coming up in just a few minutes.